welcome back to the channel. It's day 2 of my forex trading journey, and in this video we are going to break down some essential for every forex trader, that is the currency pairs. And if you've ever wondered what things like Euro USD or GBP JPY mean, don't worry, I've got you covered, and by the end of this video you'll understand what a currency pair is, how they work, and which ones are the best to focus on as a beginner. Join me as we get deeper and deeper in learning the currency pairs. I'll begin by defining what is a currency pair. In forex trading, we are always trading one currency against another. As you've been hearing, I've been mentioning two currencies at a time, that is GBP, JPY, or USD, JPY, Euro USD. You always mention two currencies at a time because you're always trading two currencies at a time. You cannot trade USD versus USD. There will be no competition there and you won't be making any money. Because remember, here we are speculating that if you are trading Euro USD, we are speculating that the Euro will gain more value and the US dollar will reduce in value. When the difference whereby the Euro has gained value and the USD has lost the value, that difference, that is what will be making us be profitable, gain something. Yeah, that is the money that we want, that we will be gaining as our profit. I'll give an example, like the Euro USD stands for the Euro versus the US dollar. We're always mentioning them as a pair because we are trading pairs. The first currency in the pair is called the base currency. That is, we're using now the Euro USD, that is the Euro. And now the USD, which is the second currency, is called the quote currency. So if Euro USD is 1.1000, it means that 1 euro equals 1.10 US dollar. That means if I buy this pair, I'm buying the euro while selling the dollar. If I sell the pair, I'm doing the opposite. I'm selling the euro and buying the dollar. Forex trading is all about the value relationship between the two currencies. So as I explained earlier, we are always using two currencies, and when they are two, we call them a pair, and their value relationship, it is what now we will be using to trade. It is what is making us actually trade. So because we want for example, if we are still using the Euro USD, we want to buy the euro, believing that or speculating that it will increase its value against the US dollar. But if it's Euro USD and we want to sell USD, believing that the euro will reduce its value. So types of currency pairs, we have three main categories of currency pairs. We have the major currencies, we have the major pairs, we have the minor pairs, we have the exotic pairs. On the major pairs, they always include the US dollar. Any currency pair that you mention and it has a US dollar, it has a USD, that's a major currency, that's a major pair. So an example is Euro USD, our famous Euro USD, GBP USD, we have the USD JPY, we have the USD CHF, we have the AUD USD, we have the NZD USD, we have the USD and CAD. The minor pairs, they do not have the USD, but they involve strong currencies. Example is the Euro GBP, the Euro AUD, and GBP JPY. On the exotic pairs, they involve one major currency and one less traded currency, a currency that it's less traded. So example is the USD TRY, which is the Turkish lira, the US dollar versus the Turkish lira. We have the USD ZAR, that is the US dollar versus the South African rand. We have the USD versus the KES, that is US dollar versus the Kenyan shilling. As a beginner, I recommend starting with majors because they have the tightest spreads, which means lower trading costs. On volatility and movement, not all pairs move the same. Some of them are more volatile, which means they move a lot in the short period, and pairs like GBP, JPY, GBP and USD can move hundreds of pips in a day. That is, they are very fast and exciting, but also very risky. That means that if you trade these currencies, you can make some huge amounts of money, but it is very risky due to their volatility. But once you've mastered how they move, how their charts are, you'll be good to go. Again, remember as we said that Forex is a business. Remember, if you realize that the GBP and the JPY are the GBP and the USD, due to their volatility, they can move very fast, even 100 pips. It's just like noticing that when selling, that mangoes sell quickly than bananas, or shorts sell very fast than trousers. So if you understand how the short market is, or how the mango market is, and know your customers and know everything about selling the mangoes, then it's easier for you to sell the mangoes than selling the bananas. Read the charts, understand the market, and follow the currency that is making you money. Don't rely on the currencies that are not highly volatile and make little money. No, here we are going to talk about the risk management. If the BP, JPY is making you enough, then go for it. Study the charts, understand how they move, how the market moves, and go for it. Again, there are other pairs like the Euro USD or the AUD USD that are smoother and more stable. There are others that are smoother and more stable, and there are those that are volatile. So if you are able to chase the volatile ones, to understand how they move, how their markets run, go for them. Don't limit yourself, but remember, you need to follow all the necessities before taking the trades. You need to understand the market, you need to know your risk management, you need to know how many pips you're going to get, the lot size you're going to use. You need to be emotionally stable. Remember, you need to have enough capital. And I'll keep mentioning this, I'll keep reminding you this each and every time. So I suggest picking 2 or 3 pairs, as I had said earlier, and sticking with them for now as a beginner. Get to know them, how they move, learn their pattern. And how the news affects them, how politics affects them, how news affects them, and you'll be good to go. You'll be sorted out. So let's talk about choosing your pairs. As a beginner, less is more. Focus on understanding 1 or 2 pairs deeply instead of trying to trade everything. I personally started with Euro USD and GBP USD, and they have tons of educational materials online and easy to analyze. Look at when the market is most active. For example, the Euro USD is active during the London and New York sessions, and the AUD JPY is more active during the Asian session. Your trading schedule should match the sessions your pairs are active in, and then go trade at that time. Go trade at that session. Don't be trading during, if it's USD, don't go trading it during the Asian session. Check your watches and even set alarms to tell you, to confirm to you when the Asian session has begun, when it's ending, when the London session has begun, when the New York session has begun, so that you'll be able to trade during your active sessions, when the pairs are in their active sessions. That's it for today. Deep dive into currency pairs. I hope you now understand what those 3 letters combination really mean and why they matter. If you found this helpful, please like and subscribe. The next video will go into the world of pips and what they are, how we measure them, how they affect your profits and loss. Stick around, the journey is just beginning. Bye.